Hello folks, I'm at my home and I've got my trading computer in front of me and it's all nice and cozy in here. The wind's blowing a bit and it's been raining, but I'm in a perfect trading environment, peace and quiet and a calm brain. That's what you should be looking for as a mindset for trading. Now, I'm going to talk to you today about price charts and price action, because the sooner that you begin to understand how price charts work and how price relates to value specifically, the sooner that you're going to get good at this. And we're all in it to make some money, so being good means making money, doesn't it? Now, when you approach your trading computer for the day, you get what you're given. You cannot, and I cannot, alter what's happening in the market. The market will be in one place or another. And what will be happening is there'll be some surge of momentum in either up or down, or it'll be flat. And that's, depending on what's happening in the market, really dictates, how many opportunities there are in trading. And you cannot alter that. So you cannot look at at trading and say, right, I need to make such and such a day, how many trades can I take? People ask me, how many of these sort of trades are there a day? And it just varies day to day, because it depends what the market's doing on any one particular day. Sometimes there's value in going short, and sometimes there's value in going long, and sometimes the market's flat. And we need to obey the laws of the market, and the market dictates. They're bigger than any one of us. But ultimately, we want to be able to have a system that operates in good market conditions and operates effectively. And that's what I've spent the last 15 years developing. And, I'm happy to share my knowledge with you. So I'm going to talk to you today about the undulations and that's what it is in price. Now, why do markets undulate? Why do they go up and down? Why don't they just go straight? And the reason is because the market has time frames. So on a 1 minute chart, every minute is a different time frame. And within a different time frame, different things happen. The market basically makes a reassessment in the split second after one chart closes, and even in between, in the middle of candlesticks, the market makes reassessments. What's happening here? Is this good value or is this not good value? And that's the key, is understanding the patterns. And your brain's good at understanding patterns. And so what are the patterns that are taking place in the market that I can understand? And a lot of it centers around value. Value, when you talk about value, people probably see it as being flat, a flat level of value. This product, this service is worth £200 an hour, whatever, £200. And so if it was less than that, that might be a good thing to do to buy it. Or if it was higher than that, you would wait until it came down. And that's what the market's doing all the time. So let's just have a look at the charts now, and I'll take you into a bit more detail and just reiterate what I'm doing. You're learning, and thank you for learning with me, and I appreciate that, and I appreciate you. I appreciate the opportunity of helping you to get better, because that's what I'm in this for. Anyway, let's have a look at the charts then. So this is the DAX, the German index, basically, back to 1980, right? So is that far enough back for you, 40 odd years? I think it probably is. Markets haven't changed over the years. The price has changed, as you can see. It was right down here and now it's up here. Now, humans, we have a propensity to evolve, to grow, and to realize our potential. And this is a basket, this market is a basket of the leading shares in Germany. And so, as you can see, the value of the companies has risen and the value of this basket has risen in line with that. So this is the monthly chart, and each one of these candlesticks, tiny little red or yellow, tiny little red or green candlesticks in here. Each one of those is got 28, 29, 30, 31 individual daily candlesticks tucked inside of them, and numerous 1 minute candlesticks, but they all operate these markets in the same sort of way. They're either going up or they're going down. Now, because this is basically, this is a reflection of human nature, an improvement, a gradual improvement over time, you're going to see this going up. And that's why pension funds, etc., invest and buy. They buy and expect price to go up over the long term. This was the COVID spike. This was 2008, 2009 financial crash. Well, what a financial crash that was. It was followed by a great big surge of momentum going up. And as the market rises and falls, it tests value. It tests value. And because these markets are likely in the long run to continue going up, each time it tests this value level, and I've illustrated it here through the 8 and the 20 EMAs, it tends to absorb the test, digest the test, and then increase in value. And that then takes the price increases, so value over time, the average value, EMAs, will rise. Okay, so whenever it's going back to value, it's gradually rejecting, unless there's an economic shock like there was here with COVID. Everybody, in the markets reacted like it was going to, the world was going to end, and this would be an irreversible problem. And it quite quickly, within several months, certainly within a year, the market was back at the level it was previously. And, this is a reflection of human instinct. Let's have a look into the future. What can I see in the future? And can I make money out of it? That's what we're dealing with here. So this is the monthly market, and you can see that the price rises here, goes up through the value level. So the market was below this river of value here, and it went up to the river, and people thought, well, actually, I think we can buy still and make money in here. So it's testing value and saying, actually, I think there's probably still going to be value in buying here. A bit of uncertainty there, and then buy. This candlestick here, wow, look at this. This was a fantastic candlestick to buy on. Price wandered back down to value and people bought, but not before there was a little bit of a reaction here. So there was this bar came down, closed in the river of value, price opened, and there was a slight reaction down here, leaving a little tail on this candlestick, and then price surged upwards. There was a lot of money in this candlestick for people who were prepared to buy. Price went up from, this index went up from 26,500 right the way up to 29,500, so 3,000 points in that month. So I think we can agree that this was a good time to buy, was it not? Down the bottom. So it's spotting these opportunities, and these opportunities exist on every single time frame. So, I chose to day trade, and when I was day trading, I thought, well, I might as well see whether I can have a look at a 1 minute chart, and this is the 1 minute chart from today. And this is over the last few days. So you can see today the market's been falling. You've had a test here of value, a test here of value, a test here of value, and traders saw merit at each one of these stages in selling. And that's what happens. You get tests, you get a momentum surge, you get a test and a momentum surge. Often during a test, what happens during the test is important. You know, for example, here, when there was a test, the market went through into the river of value. There was enough merit here for it to carry on up. And there was enough merit probably because there was a huge, the market had tried to go down, failed, and started going up and closed above the 8 EMA into the river of value. And there was enough merit to say, well, we can probably still make money buying in here up until the 20 EMA, and then there was nobody wanting to buy and everybody wanted to sell, and that's why you get the rejection down. And this is what's happening all the time. You just need to be able to see it, and then you've got a perfect opportunity. You can see that the price hardly ever spends a long time away from this river of value. It keeps revisiting it and it keeps testing it. And so it's understanding what happens in the test. The tests will result in momentum of one kind or another. And it's what happens in the test that determines where price is going to go next. So if you can read that, you don't need to worry too much. There's quite a lot of time here where it didn't touch the river of value. There are still opportunities in there, but not with this particular system. You might put a 3 EMA in there or something, and that would give you opportunities, but this combination are the combination of EMAs that I think make most sense over a period of time. So we're coming back up to value here now, and the market will again decide, is this a time to go through or not? And I have measures for that in my gold system, trading system, so I can tell. I'm not operating it at the moment, and I don't make predictions. That candlestick has not ended yet. We'll wait and see. But anyway, I'm not going to take a trade. Oh, there you go, look. It rejected from value. Each one of these tests is an opportunity to trade. You've had lots of them today, and so there's been money to make, but let's have a look at a longer time frame. So this might tell us something different. You can see these are all tests, but at this stage things are fairly flat. The market is not convinced. It's enough in there, in this combination in here, to put in another upward spurt, and this time there wasn't enough and the market went down. Each one of these candlesticks, excuse my use of the mouse here, each one of these candlesticks provides opportunity within it, and these are 5-minute candlesticks, and there will have been opportunities on lower time frames during each one of these candlesticks. And so you have to, it's always a good idea to get a perspective. So keep looking at bigger time frames. What's happening? Look at this here. This has been a long period of time where the market hasn't really gone very far. But if you look on shorter term time frames, you'll see opportunity. And this is what we're doing. Let's have a look at a 1 hour chart, and you'll see that where things have been, the market has been fairly flat. Big drop from highs here, a big drop down, the market dropped down below the level of value and then rose up above it, but was quickly rejected back down. It's now at a stage where it's saying, shall I go back up or shall I go down? And we'll all decide that together. And so there are measures that you can look at to say, based on that, where's it going next? But you can't see it within that chart. You'd need to take a bigger perspective, and that gives a bigger perspective. Big rejection down from the highs here, and there are measures that you can look at, but it's constantly making these moves and it's reading these moves that will determine your success or failure at trading. It's a process in your brain. You have to teach your brain the right things. You have to learn the right way from reputable traders like myself, and you have to learn from the best. That's what I did. I learned from the best. I coached professional traders and I learned what they looked for and what they did, and I understood the market that way. And it took me a long time after doing that to put together the gold system that I felt was, a consistent system that I could teach others. So there's value in time. Value, look, it doesn't waver very far, price, from the value level. Sometimes it goes through and sometimes it rejects. And when it rejects, that's trading gold and understanding when it could go through. This reduce when price could go through here. It's switch off the keep going short that you had in here. Could go through, did go through. Sometimes it could go through like here and then starts rejecting again. But either way, it's a switch off that system for a period of time until things become clearer. Things became clearer for a period of time in here and then less clear. So you get trading ranges. And at the moment, the market is in a big trading range here. Big trading range. It recommenced the trading range that was in here. And that's why at the moment, we're in September now, 23. Price is quite quiet. The movement, the volatility in the shorter term candlesticks is quite low at the moment because there's a uncertainty at a higher level, if you like, or a longer term high uncertainty, where they're waiting until value is confirmed, and then they'll decide I'm going up or I'm going down, and that will move the market. And that's how you make money in trading. So if you want help, give us a shout and learn to read the candlesticks. Learn, you can only learn from the past and from the present, and you need to watch the charts. You need to read the charts. You need to go back over charts because it's all adding power to your brain. The more you learn, the more you see. Think of a tree. I'm going to learn about trees. If you're into trees, or your job, your earning, your livelihood depends on it, you'd want to know all about a tree, and therefore in the same way you want to learn all about trading charts. Anyway, that's it for today. Hope you've enjoyed that and got some good info from it. My name's Anthony Beardsall, Excellence Assured Trading Academy. Leave any comments, questions. You can ask me directly through my website at excellenceassured.com, or leave the questions below. Always good to hear from you. And I hope you're getting some good value out of this. I'll speak to you soon. Cheers for now. Bye.